Jim McCarter's draft report, I think in September, if I recall correctly, Jim.
Mid-September, I think, Mr.
Yeah,
Wilson.
mid-September, about there. And so there was I had a meeting with Patricia on that basis. The other meeting, I'm just reflecting back, and my memory will, it's a memory test here. I know I had and I'm not sure it was the same meeting or a prior meeting. I can verify that for you if you wish. But I had another meeting with Patricia Lee where we were talking about the audit, the provincial auditor's audit, and I had expressed some concern about how the audit was validating data, and in particular a meeting that we had with the audit team where they came and said, well, we want to sit down with you, Orange, the representatives from Orange, and we want to validate that we had the facts correct. And the process of that validation was the members of the audit team would rapidly read out data, which, from my experience as an auditor, and I've done lots of audits, if you want to cause confusion and get people to get confused very quickly, that's one way to do it. So I asked the audit team to slow down, to present the data in bits, so that if they wanted confirmation that we could, obviously absorb and say, yes, that's right, or no, that's wrong, and so on. So I whether it was by phone or a meeting, I can't remember, I had a chat with Patricia Lee and basically to say, is this normal? Based on your experience and having dealt with the provincial audit teams. And anyway, we got that resolved, Jim. It's not to belabor the point, but we got it resolved fine. It was just a process that was a little awkward.
All right. Before, in 2000, remind me when you started on the board at Orange?
I started on an advisory board before Orange, or the company was created, and that would have been, best of my recollection, would be 2005.
Okay.
Late 2005, somewhere in there.
So from 2005 on, had you or the board ever initiated other communication with anyone in the government?
Not that I'm aware of, no.
Okay. So really the first time was when you were presenting your new corporate structure.
That is correct.
You came with Mr. Apps, and you came with Mr. Lepine.
That is correct.
And you presented it.
That is correct. And just to clarify, the reason for that was that we had created an independent committee of the Orange board to review the proposed transaction to create Orange Global and the relationship and the various licensing agreements and so on. And so when we in the independent committee reported back to the board to say that, okay, we're comfortable with the way that the money would flow from the profit side to the Orange side, we're comfortable with those arrangements and so on, then it was put to the board to say, well, should we proceed? Have all the dots been dotted and the I's dotted and T's crossed? And there were two items that we felt needed particular attention. Because more from just a good due diligence standpoint. One item was related to the credit rating that Orange had. And we wanted to because obviously Orange had a bond. The rate was dependent on the credit rating. And we wanted to make certain, first of all, that Orange's credit rating would not be impacted. And secondly, that because of any imputed relationship between Orange and the government, that the government's credit rating would not be impacted. So there was a condition put on the board approval to move ahead that said, well, there has to be some confirmation of that credit rating issue, which was done. The second condition was a condition that said, well, we have to be comfortable that the government is aware of this. And this is one of these situations where, we talked about it in the board, and, from my own point of view, I kind of said, well, I'm not going to be comfortable until I sit in front of the people and tell the story and, see the color of their eyes, so to speak. And if I hear any objection, if I get any objection, I wanted to make sure that, there was a clear communication of things to the government and an opportunity for me to hear any rebuttal or concern or questions. None of that, by the way, came about. I mean, there were some interesting questions for clarification, but there was no indication in any of the three formal presentations of any negative reaction whatsoever. From my perspective, it seemed, it appeared that from the lack of questions and the lack of response, that people around the table were not surprised. After all, I'd sent the letter, I think, back on January the 11th or 18th, I can't recall, one of those dates. So all of this was set out in a letter that had been widely distributed, some time before. And certainly the meetings with the other government ministries occurred in February and March, thereabouts. And so, there would have been plenty of time, in my view, to have some form of reaction, negative, from government. And there wasn't any. So on that basis, we as a board said, well, the government's been informed. We haven't heard anything. Therefore, must be fine. Obviously, we offered clarification on questions as they came up about, why this structure, why this, and so on. But other than that, there was nothing that came forward that suggested we should not proceed with full steam. So hopefully that answers that.
Yeah, it does. Okay, so those are initiatives that you had taken.
Yes.
To reach out to government.
Yes.
To basically share the direction that
Correct.
Orange was going.
Correct.
Can you remember the opposite way around, where the government reached out to you to get information from you? And when I say government, take it broadly.
Sure. Most certainly. Let me go back. I think the first time that I received a call or communication from government was from Ruth Hawkins. That would have been in 2008. And there might have been a couple of calls. I know there was, and I'm trying to remember the sequence. Again, I can look it up and provide you with specifics. But certainly there was one call related to consolidation question, and there was one call related to a letter that Ruth had received internally within the ministry from an individual outside that had raised a number of concerns about Orange. And Ruth called me. We had set up a meeting. Myself, Luis Navas, there was Ruth Hawkins, and I hope I'm right on. I think I am Ken Flynn from Ministry's Internal Audit. Okay. And we met at Julia's Restaurant in Oakville around about December 6th or 8th of 2008. Okay. And she shared with me the content of this letter, which was accusatory of Orange having, if I remember correctly, I don't have a copy of the letter, accusatory of Orange of having 2 sets of books, doing a bunch of things, other items, including having exorbitant bonuses, something of that nature. I believe Ken Flynn looked at the issue of the 2 sets of books. We certainly looked at it internally, and that was nonsense, simply put. And I did communicate back to Ruth Hawkins, I believe in a formal letter, which would be on file with Ruth, no doubt, which detailed the process of compensation and the bonus process, and basically conclude that from the board's point of view, there wasn't anything inappropriate going on at the time. Round about that time, we're also dealing with, I think, I don't know whether it was a result of that or before that, but in any event, then came the ministry's internal audit and the process there, and MNP and that process. But so that was a communication from the ministry to me. Other than that, I'm trying to recall, I know that there might have been a call from Patricia Lee at some point about something or other, but that would have been in 2011. Possibly is question as to the status of our response to the AG's draft or something. Perhaps Patricia would have better memory of that, but very, very few communications back and forth.
Okay, so except for kind of a busy period in 2008 where you got a call from Ruth Hawkins regarding the consolidation at the time, then you got another call followed by a meeting regarding a letter with concerns, specifically 2 sets of books. Correct. And the bonus, and which you responded in writing, and a communications from Ms. Lee in late in 2011 after the AG's report, draft AG's report. Those are the only time you can remember that the government...
No, let me, I just remembered some additional ones.
Sure.
I did receive either addressed to me directly or copied to me letters from either, again, I have to go back and try and find these, either the Assistant Deputy Minister, or the Minister,
okay, informing
me of changes to the budget allocation. You've done a wonderful job, you get 3.5% or whatever the case may be. And there
would
were
you call this like the standard letter you got every year with your...
And there were a number of letters which we also received, and they might have been addressed to me or copied to me, dealing with the changes in the procurement policies from government, as a result of the various things that have occurred, including, consultant muffins and things of that nature.
Yes. Choco bits they were.
And in each case, I believe the letters always said, basically, we know you're not required to follow these rules, but we would like you to follow these rules. And our response, we always give a formal response, which said, of course we'll follow these rules, no question. So that's where those other communications came. So I just bear with me. I don't think there were any more, but if something jumps to mind, I'll certainly jump in and
quite allowed. The memory test will keep on going for a while,
sure.
and sometimes they get tougher. There's one issue that I would like you to try to remember if you ever got. There was a report that was done by Mayor Norris Penny.
Yes.
You remember in
Absolutely.
Okay. The first recommendation had to do with the corporate structure of Orange, mm-hmm. and it basically, the ministry said that their legal services branch would follow up. Basically, the report from Mayor Norris Penny said, Minister, you should look into this.
Right, I recall that, yes.
And the minister says, yes, we will, or the legal services branch of the Ministry of Health will do an investigation of that. Did the legal services branch ever come to you?
Certainly it didn't come to me or any member of my board, as I recall.
Didn't write, email, tweet?
I don't recall any communication in writing. I don't recall any emails. I don't recall any phone calls. In fact, I don't recall any discussions about a change in corporate structure resulting from that. I mean, just nothing that came forward that I recall.
In your last minute.
And this is my last minute and a half. Did you want? No? Okay. So the first thing I wanted to establish was really communication.
Right.
If through the 2.5 hour we'll spend together,
Yeah.
if other things comes to mind, please let me know. So
I certainly
you
will.
were really clear as to the times that you've reached out, and you seem pretty certain of this.
Yep.
If there's other times where the ministry asks you, except for the standard letter you get once a year as chair of the board, here's your allocation for next year, please sign and send it back. We expect you to get those. But things that had more to do with inquiring what was going on at Orange, or basically any other effort from the ministry or the government to reach out to Orange that comes back to you, please share it.
Let me be clear. There's nothing at the present time that I recall of any ministry communication with me or members of the board other than what I've mentioned.
Okay, thank you.
Thank you. So we'll move on to the government, to Ms. Sandals.
Yes, thank you, and good afternoon. Thank you for coming back, Mr. Beltzner. When Dr. Mazza appeared before this committee, he said that he regretted that his $1.4 million compensation had become a lightning rod for controversy, his words. However, he really refused to acknowledge that this compensation package was in any way excessive, and he repeatedly told the committee that he was not involved in setting his compensation, and that his compensation was, and I quote, was always the purview of my board of directors. I had no input into my compensation. My opinion was never requested about my compensation. He seemed to be having trouble remembering what his compensation actually was. Presuming that the Sunshine List as published in 2007 accurately reflects his 2006 compensation. It was $284,206. Another witness has said that in 2009 it was approximately $550,000, and of course what we know by 2011 we're talking $1.4 million. So that means that between 2006 and 2011, the figures we think for sure, his compensation increased by $1.1 million, which seems a rather large increase in compensation. So I guess, do you believe his compensation in hindsight was excessive, perhaps even outrageous?
Well, let me, perhaps I'd like to go back to, in answering that question, I'd like to go back to Dr. Mazza's assertion about his involvement with compensation, if I may.
I would be delighted if you do that, because that was 2 or 3 down the way in my questioning.
Yes, thank you. I'm trying to presuppose what your question is. I have
chaired boards and board compensation committees, and I have never just walked up to the CEO and said, gee, we'd like to give you $1 million more. So
well,
I
Ms.
thought
Sandals,
this was odd.
I can only say to you that based on my experience in having dealt with probably well over 100 CEOs in my professional career, I don't know of any CEO that is totally absent from discussion on compensation.
That was my reaction.
So let me,
Would you please explain the process from your point of view?
I've made some notes for myself just to try and put this in good order. So first of all, members of the committee, the compensation process, as you can well understand, was adopted by the board after discussions and advice from compensation consultants. So we don't do this sort of in the black. We get good advice. We adopted a pay-for-performance model, which guarantees a base salary and has at risk the bonus or the amount up to a potential total compensation. And the way that we structured the pay-for-performance model was that the base salary would typically be 50% or less than 50% of the total attainable compensation. So the total potential compensation is then made up of the base salary, the benefits, plus any bonus. The benefit amount, by the way, is for executives is there to cover health plans, pension contributions, and so on that are typically covered for lower-end employees under HOOP or whatever other arrangements there are. So the bonus component, the performance bonus component, is determined as follows. The CEO presents on an annual basis the short and long-term business plan to the board. One of the responsibilities of the board is to do strategic planning and to reaffirm the business plan. The business plan comes initially from a presentation from the CEO and is then discussed by the board and amendments made as necessary. So the board debates the proposed plans and after any necessary agreed amendments approves the plan. And that sets the framework for going ahead. The CEO then prepares, under the pay-for-performance model, a draft of his balanced scorecard. Now, the balanced scorecard, for those that are not familiar with the balanced scorecard, basically sets out a set of key objectives that are directly tied to the approved business plan and the deliverable and related specific metrics to be achieved within the next business year. Okay, so you've got an overriding objective, you've got a bunch of deliverables, and then you've got a bunch of metrics in terms to be achieved in the next year. Usually they're no more than 3 to 5 business deliverables, each having a particular weighting adding up to 100%. The metrics are categorized under 3 achievement targets: threshold, target, and exceeds. In plain English, it means basically you're doing okay, you're doing a little bit better than okay, or you're doing really well. You've exceeded your targets. So each of these is tied to a bonus percent. That bonus percent is on the base salary. So clearly, the CEO develops the balanced scorecard initially by himself based on the approved business plan and then presents it to the board. So but to clarify, the percent of base salary that becomes the bonus for each achievement level is something that comes from advice from compensation consultants. So they tell us that if you achieve threshold, it's typically 15% bonus. If you achieve target, it's 30, and whatever the case may be. So the weighting of deliverables, in other words, out of 3 to 5 to 7 deliverables, what has more weight in total is something that is discussed among the board and agreed with the CEO. And that basically is, what's more important than something else, and that drives the CEO's direction. So then that draft balanced scorecard is presented to the board by the CEO. The board then discusses it in depth, challenges the CEO, and makes changes as necessary, and we've made changes, and that gets final approval. The CEO then uses this scorecard objective and deliverables to develop the balanced scorecard for each of his senior management team, so that there's accountability going down for the same objectives, and all the way down to the lower levels of the organization.
But the balanced scorecard for the CEO is approved by the board?
Absolutely. Absolutely. And the balanced scorecard for the senior management team that reports to the CEO is approved by the CEO. And it's his objective to make sure it matches because it ties into his. Right? If his reports do the right job, and then his own job does well. During the course of the year, the CEO then comes back and presents an interim report to the board on the progress toward achieving the deliverables. And shortly after the end of the business year, the CEO prepares a formal presentation to the board concerning his achievements against the agreed balanced scorecard. The CEO self-evaluates his performance and presents his achievement level to the board, as well as his recommendation for the bonus.
So for 2011, what was Dr. Mazza's base salary?
I honestly can't recall. It might have been somewhere around $500,000.
And would the compensation committee then have, because if I'm understanding you properly, you've got the percentage that would be achievable if you exceeded the target.
Correct.
You've got, did you set any maximums?
Yes.
So you would have been able to do the calculation as a compensation committee that says, given these weightings, let's assume that he exceeds the target on every threshold.
Correct.
And that he reaches the maximum percent of exceeding, and this is the percent. You would have been able, as a committee, to do the math and figured out what was the maximum possible salary.
Absolutely.
So, is $1.4 million an appropriate maximum possible salary?
Well, as I indicated in my opening comment the last time I came to the committee, there was a bit of a discrepancy between what we recalled his compensation maximum to be and what the numbers added up to when the compensation numbers came forward at the end of 2011. And that discrepancy had to do with this additional contract that Dr. Mazza had with regards to, I think what he referred to as a stipend, which was a contract between Dr. Mazza's professional corporation and Orange. And
so in addition to the compensation which the board approved, he also had a contract as a private company.
Correct.
So are you telling me that when he was on the Sunshine List in 2000 and, his 2006 Sunshine List number of 284,000, in fact, failed to reflect his total compensation?
Well, I was going to get to that. And the answer is, I believe, and my comment would be that I don't believe the amounts that Dr. Mazza had been receiving as a stipend either before he joined Orange, in other words, while he was working for Sunnybrook and Women's, or after he joined Orange, were reported under the Sunshine List. I'm not sure of this. I'm speculating at this point.
So in fact, there's actually the 1.4 million might be an accurate total.
Correct.
But the Sunshine List information is probably what's inaccurate. He was actually making more money all along, as I think what you just told us.
Yeah, and perhaps if I could just elaborate on that point, if I might. And in 2008, Dr. Mazza, at the request of Dr. Mazza, the chair of the compensation committee at the time, came to me and asked me to co-sign a services contract between Dr. Mazza's professional corporation and Orange. I was informed that this contract was in fact a carryover from his prior employment with Sunnybrook.
So given that why?
And that his professional services as a medical director, which is what the contract said, were in fact required. I recall reading the contract, and that it did in fact set out a series of professional services and deliverables as a medical director, which is above and beyond his job as a CEO and so on. I was subsequently informed that a prior contract that existed and signed by Jacob Bloom and authorized by Jacob Bloom, and this would have been, I believe, it was 2006. I didn't know that at the time. But I was informed that by the chair of my compensation committee at the time that, yes, this was a rolling contract. It existed for upwards of 8 years, and the services were required. This was normal. I read through the contract, and there were clear deliverables, responsibilities, and so on. I saw nothing wrong with it, quite frankly, and as well signed it. So what became apparent in 2011, though, what became apparent to me in 2011 was that Dr. Mazza was not in fact providing any of the services, nor were they required. This was apparently, according to information provided me by Mr. Lapine in late 2011, as all of this started to unravel. This was well known to the former chair of the Medical Advisory Committee, Dr. Bruce Sadowski, who, as chair of the Medical Advisory Committee, reported directly to the board and never reported anything of that nature, and including that Dr. Mazza was challenged by Dr. Sadowski and I think Mr. Lapine about this at various points. And Dr. Mazza basically rebuffed them and told them to go away. When I heard this, I did follow up with Maria Ranzella to ask the simple question of, where's the support for the payments? If we're paying for services, surely to God there is an invoice or something that says the services are required. Such as an invoice from professional corporation detailing hours, deliverables, and so on, all of which one would expect to support, at a minimum, to support such payments. I was informed that no such invoices were ever provided, yet payments were demanded by Dr. Mazza and made. I subsequently asked about any other situations where payments under contracts were made without supporting invoices, and 2 additional situations were brought to my attention at that time. The first by Mr. Lapine, who told me that there were payments made to a Dr. Tom Stewart for which services were apparently not required. I don't know whether this is true or not.
Dr. Stewart? That's a totally new name in this.
Dr. Tom Stewart, I believe, is a senior physician administrator at Mount Sinai. I believe. You would have to check. Both of these, so Dr. Stewart's situation, somebody tells me that, we're paying something for which services are not getting provided, as well as Dr. Mazza's stipend situation. I then put together an email to Ken Flynn of Ministry's Internal Audit, which detailed what had been identified and occurred, and I asked Ken to follow up. I said, this is strange, unusual.
Strange would be an understatement.
Exactly. And basically, I want you to follow up, and that was it.
I wonder, Chair, if we could take a few minutes at the end of the meeting, because I don't want to take the time away from questioning the witness, to craft a sensible motion to see if we can get this information from Orange, because I understand you no longer have access to the records.
Correct.
But I think the committee does need to get the information about every payment to Dr. Mazza. So when you look back at this in hindsight and look at all the various different payments, I mean, the alarm bells that are going off in my head, quite apart from the outflow of money that not even you as chair of the board knew about. My God, Jacob Bloom is signing off on contracts?
That came as a big surprise.
Where did that come from? But we need, what does that say about the governance model, that all these contracts are floating around, and the board chair, the chair of the compensation committee, nobody seems to have the whole picture?
Well, I think you could appreciate that, the board is somewhat at the mercy of the management team to come forward and disclose, report things that they feel are inappropriate. The board is not in a position to, get fingers into the day-to-day operation. That's not the role of the board. The board has a right to rely on appropriate reporting from management. And this is something which certainly over the course, and Jim, I see you're nodding, over the course of the years, one of the things that the board has done, and I just wish to reiterate, and perhaps I'm a little exercised over this issue, but I have a right to be.
Yes.
As a board chair and as an experienced professional, I am relying on the trust from senior management to come forward and report things that they feel the board should be aware of. We have written reports to the board and committees from all of senior management on a quarterly basis that cover operations, HR, finances. In none of those have any of the more significant issues that have come up before this committee come forward to the board.
Just quickly, let me go to the disclosure issue, because
Sure.
on the salary disclosure issue, Dr. Mazza again was quite clear that this was a decision that was made by the board in terms of not disclosing the salary once he was moved over to the for-profits. But we also heard from Lynn Golding, who said, yes, we said that was technically possible. We also advised the board that they had a moral, ethical obligation to report to the ministry. Why did the board end up, it would appear, supporting Dr. Mazza's viewpoint that the salary not be closed, as opposed to the legal advice, which is, yes, technically possible, but you really should tell the Ministry of Health what's going on?
Thank you for that question. First of all, I was surprised to hear Lynn Golding's testimony. I was listening to it, and I was surprised to hear that comment about the advice being that, nevertheless you should. Because I don't recall that advice ever coming forward to the board. She may have provided that advice to management. I did consult with a couple of my board members, on that issue, and I said, do you recall this? No, not at all. The question of salary disclosure was more around the question of, are we on board legally with everything we should be doing? That's the concern of the board. And the response, the legal opinion, was we don't have to disclose salary. That's what was presented by Dr. Mazza.
So if we were to check the legal advice, the documents received by the board, we would just get an opinion that says you do not have to disclose.
I believe all that came to the board at the time, in whatever form it came, was the indication that legally we don't have to disclose. Because our concern was to stay, in all circumstances, compliant with the performance agreement, compliant with all laws and legislations, and that was it.
And whose idea was it that Dr. Mazza and the others should have their employment status changed to be for one of the for-profit entities as opposed to for Orange, the non-profit?
Well, you were asking me that question the last time I was here, and I wasn't trying to evade the question. I'm just, it wasn't the board's idea. I just want to make that clear. We were embarking on an approved business plan, and I just want to make that absolutely clear. We had long discussed this business plan about creating a structure that would allow for the generation of for-profit revenues to go back eventually to Orange and so on. And this was the evolution of that structure. As part of that evolution, what was presented to the board was that all personnel other than those directly required under the Ambulance Act would move from Orange to Orange Peel.
So that, and I'm cognizant that we're running out of time. But
so the board approved it.
The board made a decision that the employees would move based on their direct service to air ambulance.
Based on recommendations from management, yes.
Okay,
absolutely. And consistent with legal opinion as to what was permitted, allowed.
So that was a board decision.
Yeah.
Okay, thank you very much. We'll move to the opposition. Mr. Please.
Thank you, Chair. Mr. Beltzner, interesting story. We have yet one more situation where previous witnesses have laid blame on someone else. We heard from Chris Mazza, and he actually put you into an incredibly good light because he attributed his very generous compensation package to you, sir. And I hear you saying that you're refusing to take on that label of generosity. I'd like to not to belabor this, but can we agree on the $1.4 million compensation number that we have been dealing with here as the compensation that Chris Mazza received in the last fiscal year as a starting point?
Based on the information that was put together by, I believe, Maria Renzella and Rhoda Beecher in the fall of 2011, very specifically, after much back and forth with government, the number of 1.4 million was in fact, I believe, reported as the total, and that would have included that, that stipend issue.
Okay. Of that 1.4 million, how much of that would have been the personal loan to...
nothing. The 1.4 million compensation would have consisted of his base salary, the benefits percentage to account for pension and those things, the bonus amounts, as well as those payments under stipend under that contract that I cancelled.
Okay, and then in addition to that, there was a personal loan.
There was, in addition to that, there was in 2010, a loan to Dr. Mazza, which was a housing loan, which is approved by the board and was, contrary to constant reports in the media, interest-bearing.
Okay, and what was the interest rate on that?
It would have been the prevailing CRA interest rate, because one of the things that we did, and very carefully, was to do some research through Maria Renzella and Rhoda Beecher at the time about two things. One is, would a housing loan in any fashion violate any of our abilities under performance agreement or whatever the case may be? And the second question was, we wanted to make sure that it was structured to be fully compliant with CRA. So that, and that was, Dr. Mazza is not a tax expert, so, the logical thing to do is, make sure that things are done in accordance with CRA rules so that he doesn't get himself into trouble on that side.
Okay.
Now, I'm aware that both on this loan, the advance on a bonus that was made by GP, which I can elaborate on, as well as the additional housing loan, that the media constantly reports no interest. I just want to assure the board that the board minutes of all of those entities are very clear and very clearly specify interest.
Okay, so
whether he paid interest, whether Maria Renzella ever charged him interest, I'm a little bit in the dark about that.
Well, that's certainly something that we would be interested in following up on.
I'm sure the forensic auditors or the other investigations will get into that.
So with regard to these loans, what I'd like to do is get some details.
Sure.
There was more than one loan, as I understand it.
Yes.
So there was the housing loan, and how much was that loan for?
Best of my recollection, the housing loan, I believe, was either $400,000 or $500,000, somewhere in that range. I'm sorry, I think it was $500,000.
$500,000. And was that secured against his residential property?
No, it wasn't secured against his residential property, because I don't believe he had a property at the time that he took the loan out. What we did was we secured it against his future bonus payments. Payments out of his long-term incentive plan were, if you like, required to go against the loan rather than him.
So he created his own golden handcuffs. It's pretty hard for you to fire him and not give him a bonus if he owes you a repayment on $500,000, right?
Well, certainly our incentive, on the long-term incentive plan, which is another subject that we can get into, as I think has come up before under some testimony, Dr. Mazza at some point in 2010, in discussions with the compensation consultant tells me that Dr. Mazza is looking to greener pastures and other places. This was of some concern to me and the rest of the board, as some of the critical business objectives and deliverables were very, very clearly tied to Dr. Mazza's continuance within Orange.
So there was a threat that he was leaving or considering another
Correct.
offer.
Correct.
Did the board ever have a discussion with Chris Mazza about that, and did the board ever ask for proof of that?
No.
That offer?
No. No.
Would that not have been a reasonable thing to do?
Well, I know I had some difficulties with, when I had the discussion with the compensation consultant, I had some difficulties with Dr. Mazza's assertion that he could get a job at a better value and so on. So we had a bit of a back and forth on that. I was, however, aware that Dr. Mazza had been in long discussions and interactions with a Charles Fabricant, who is the CEO and chairman of Secor in the U.S., a rather large company, and who also has a subsidiary that's in the air ambulance business, or providing services in the air ambulance business. So I didn't think it completely out in left field that others would be interested in Dr. Mazza. And certainly Charles Fabricant, from the couple of times that I met him, certainly demonstrated a strong liking to Dr. Mazza. And as I said, they had a business in this area. He was a potential investor. And yes, there was a risk. We evaluated the risk. And we said, well, fine, if we can lock him down with a long-term cash incentive plan, that wasn't such a bad idea.
And what about the other loans? If you could itemize those for us, please.
Sure. So now we roll into 2011, and in the beginning of 2011, Dr. Mazza approached me and possibly some others on the GP board. We're not talking GP. And saying, look, I've worked hard. I've gone to lots of presentations. I've, been presenting to everybody from OMERS to people in the U.S. to people in Brazil to invest and all of this. And we're going to get a $20 to $30 million investment. That's I've been promised that from this particular investor, and I think I should get a bonus as a result of all my hard work.
Of course, in advance of getting the money from the investor.
Well, and he wanted the bonus to be early, right? And there was a percentage that he had put forward, which would have resulted in a higher amount than we actually advanced him. The bottom line of that is, he was, very up on this, positive on this, and said, well, how about in advance of closing the deal? And so we, discussed it, agreed on an amount of $250,000 as an advance against the bonus. Again, interest bearing in this particular case, at our actual cost of money. So it would have been higher than the CRA rate, and basically that would have been a direct loan at our current cost of money.
And how was that drawn up in terms of paper?
There would have been Maria Brunzella would have drawn up a formal agreement.
Did you sign off? Did you sign those documents?
I can't recall. I presume I did, but I honestly can't recall. So that would be in the records.
Okay. Do you recall, assuming that you did sign off, do you recall seeing the documents? And if so, was there a repayment schedule as part of those documents? There
was no repayment schedule as part of those documents. As I said, the understanding was communication as minuted in the board minutes. He was to receive $250,000 at our whatever our current cost of money was, and interest payable without particular repayment terms. It was against a future bonus.
Okay, so if that was a bonus, characterized as a loan,
Yes.
what were the tax consequences to Chris Mazza on that?
Well, I mean, that kind of a situation, I'm a little fuzzy on my tax rules. You'll forgive me. It's been a while since I practiced tax. But in that situation, I presume, it's similar to you going to the bank to borrow money, and the rate of interest you pay is what it is. I presume if that loan had been outstanding for more than a year, there might have been a deemed income component from tax purposes.
Okay, the other bonuses or loans.
Well, all right. So then the last of the bonuses, last of the loans was again in 2011. Dr. Mazza approached certainly me and perhaps other members of the Global GP Board with a request for additional funds. And the committee and the board, after discussion, agreed to an additional interest-bearing secured housing loan of about $400,000.
Another $400,000. But this one was secured against his property?
This one was secured against shares that he owned and insurance policies.
And the shares were in what?
I believe OGMI.
OGMI. That would be Orange Global something
Management
International?
Basically the management company that Chris was majority shareholder of.
So this was his personal management company?
No, this was...
this was an Orange Global.
This was the management company that was set up to initially hold 99.99% of the shares of the limited partnership, which would then be diluted as investors came in.
Okay.
Right.
And what percentage of shares did he own at that time?
Other than I was told that he owned a majority portion of the shares, I don't know how many shares he owned.
So what was the value of those shares?
The valuation of the company, assuming it could be monetized, was I think about $100 million was the valuation.
And what would that be based on? What would the asset
I don't know.
What source of income did that company have?
The company had no source of income.
No source of income?
No. The company had
no assets, but it was worth $100 million.
The company had no source of income at that point in time. No.
So we have a company with no source of income, owns no assets,
but has a license agreement to utilize the know-how and the intellectual property of Orange, which then has value, if you like.
And it has value to whom?
Well, it has value to anyone that wanted to start an air ambulance operation, for example, in another jurisdiction. Obviously, when you start an air ambulance operation, it's clearly helpful to have an experienced management team. It's helpful to have access to know-how, methods, processes, so that you're not, starting from square one. And that, in fact, that was part of the product set that the for-profit side was moving forward with, presenting to jurisdictions like Brazil and others the opportunity to launch air ambulance operations with the know-how of Orange.
So I'd like to pursue this, getting very interesting. The knowledge base was developed within the walls of Orange, which is a government-funded, not-for-profit company designed to deliver air ambulance service within Ontario.
Correct.
The individuals who gained that intellectual property were being paid by the Government of Ontario to carry out their work and build their intellectual property within the context of that not-for-profit Orange company that was government-funded, correct?
So far, you're correct.
Now we take these people and their intellectual property that was seeded by taxpayers' dollars, and we move them over into Orange Global Management International, and voila, we create for these people who are now shareholders of that company a $100 million value. Right?
Well, you're partially correct.
Well, tell me where I'm wrong.
Well, I think it's fair to say that, 4 or 5 people alone can't do that. They need to have access to processes, methodologies, procedures, software.
And all of those methodologies and all of that process, they brought with them.
No,
from Orange.
Well, no. In fact, if they had used it, it would have been violation of rights, obviously, intellectual property rights.
Well, I
understand that in order for all that good know-how to be used in its totality and have any value, it really has to be under a master licensing agreement from Orange to that party.
And of course, that licensing agreement was in place because, as you say, that's
Yes.
what gave value.
Correct. Without the licensing agreement,
right.
2 things could not happen. The first and foremost is that there would be limited ways by which Orange could benefit monetarily from those operations. Because the license agreement, from a tax position and to protect the charitable status of Orange, was a mechanism by which we could extract from outside of Ontario some value for the methodologies and good works that have been developed within Ontario in the air ambulance system. And that licensing agreement, as you're well aware, we looked at a number of different structures, had some, hired Price Waterhouse, who did some research in different arrangements, and in terms of, what kind of fees are reasonable and so on. And we came to a conclusion, 2 basic conclusions from all of that. One was that to establish a percentage based on the net revenue of organizations using the license agreement would be a very difficult way to get comfortable that the amounts flowing over were in fact proper, because as I think we can all appreciate, net revenue, bottom line revenue, is after all sorts of expenses and goodness knows what else comes in. And we didn't want to get into a situation from the Orange side of having to decipher financial statements of companies on the other end. So, one of the conclusions we reached was that the simplest way to identify fairly the amounts that should flow over was to base it on gross fee revenue. So whatever dollar came into the right-hand side, the profit side, a percentage of that would, before anything else happened, flow over to Orange. And
that's
I know
where
there's
the 3% came in, right?
Yeah, and I know there's, you've made a lot of comment about 3%, But, again...
Well, 3% of $100 million is not bad, right?
3% of gross
I understand.
is
Mr. Belson,
not a
I'd like
bad
to...
number.
I think we've pretty well nailed that one down.
All right. We're 21 minutes, but you can continue.
Yeah, I'd like to continue with this because I think it's rather interesting and it's pretty fundamental, I think, to a number of issues. But our friend Chris Mazza got himself another $400,000 on the strength of his shares in OGMI, which was valued at $100 million because of the tech and all that. Were there any other loans?
No.
No other source of income?
Not at that time, no.
Did Chris Mazza carry an OHIP billing ability with him as a doctor?
I honestly don't know. I know that, one of the things right from the early days, Dr. Mazza and I had a number of discussions around the question of, I think he was doing some stints in Toronto General Hospital as an emergency physician.
Mm-hmm.
And I know he was doing some stints as a patch physician within Orange. And there was always, I know he and I discussed this question of whether, he should continue to do this. And my view, as well as the view of the others on the board, was that it was, pretty important for the individual that's running the air ambulance system to have, hands in to a couple of the key medical areas. I mean, he was the expert in critical care transport.
Plus a lot of other things from what we can see.
Well, that could be. But, on the subject of critical care transport, we certainly supported him doing stints, for whatever rate of pay everybody else got doing those stints.
Yeah. So in addition to all this, he would have an OHIP billing and who knows what he's collected through that. He's done very well. And obviously he had an incredibly cooperative board. I'd like to go back to this OGMI.
Sure.
Where he had, I think you said the majority of the boards, the shares, 60%, or did you say...
My understanding is that he had majority ownership of that.
Who were the other shareholders of that corporation?
I don't know all the shareholders. I know that after the company was formed, he let a number of, I can't recall whether it was 3 or 4 or 5 of us on the former board advised us that, we were offered 0.5 of a share or 0.75 of a share, and in my case it was, I think, 2.5 shares or something, some minuscule amount.
So 2.5 shares would have been valued at what?
Well, from my point of view, 0, and a long time of 0.
No, but if you as the chair of the board were willing to give him a $400,000 loan against his shares, you must have there, and you've said there's a value there, like $100 million. Let me ask you this way: how many shares were there issued on the?
I have no idea.
But okay, I won't get into that. I have to believe, sir, that you had a pretty good idea of how many shares were in that corporation or what your shares were worth.
I can assure you I have no idea how many shares. I have no idea of how the shares were distributed. Certainly didn't at that time. I have learned since that, certain members of the management team had gotten shares. I couldn't tell you how many shares they got.
Okay.
But
so
I'm
there's
sure
that share, that OGMI.
Yeah.
The other for-profit companies, we have this. I don't have to give it to you because we
probably know it by heart.
We know what that looks like, right? So there are a bunch of others. Are there any other companies in which you personally own shares?
No.
So you own shares in none of these?
I have nothing to do with anything other than being on the board of a number of those companies.
Who were the shares? I'm assuming Chris Mazza owned shares in all of them. Would that be correct? The other companies
were subsidiaries of a limited partnership, I believe.
Okay.
And so it would have been the limited partnership that owned those, yes.
where did the seed money come from to establish these companies? I mean, to establish a company costs money. You have to pay lawyers, right? So there's an expense to even putting the scheme together. Where did that seed money come from?
To the best of my recollection, the funds that Orange GP had access to were under that agreement with Augusta, Marketing Services Agreement. That was a revenue-generating item for GP. And then there was...
So how much of that Augusta money would have gone? Let me ask you this,
Sure.
because it'll be helpful. When that Augusta money came in,
Yes.
where was it deposited, into which of these companies, as kind of an entry into this scheme here?
I honestly can't tell you. I assume it went into GP, the general partnership.
Okay.
Right.
And what was the name of it? I don't... Is it
Orange Global GP?
Orange Global GP. Okay.
Yeah, which under limited partnerships you create a general partner.
Yep.
That handles all the business activities.
Understand.
And the limited partners are silent.
Correct.
Right.
So it came in there, and
I presume.
how much money would have flowed into that? The full amount. There are two contracts, as we know, amounting to $6.7 million.
Sorry, I don't
Not
know.
sure.
I'm
But
assuming it was the 4.8.
Okay. Was there any other source of outside money coming into any of these companies other than that?
Well, there would have been certainly, as you're aware, Orange Peel and Orange Air moved over to that for-profit side.
Yes.
And the payments that for the employees engaged on Orange operations and the air operations for Orange, those costs would have been charged back to Orange under a management services agreement.
Right. So I think this is important for us to get a handle on. So when you set up these for-profit companies,
Correct.
And the employees were moved over there,
Yes.
their salaries were paid out of that for-profit company. The for-profit company charged back to Orange Not-for-Profit those salaries.
The salaries of those individuals
Right.
that were involved in Orange operations.
Right.
Correct.
Was there...
And other costs that were paid for fuel and whatever else.
Okay. The overhead.
Correct.
Was there any kind of a profit margin that was added to that as a buffer?
Not that I recall, no. In fact, the management service agreement, I think, said very specifically at cost.
Okay.
Because the intent, Mr. Cleese, understand that the intent of having, of moving Orange Air and Orange Peel over, which had $1 values, I mean, they had no assets. They had a bunch of people doing work on behalf of Orange and licensed to fly planes and things of that nature in Ontario. The intent was to be able to leverage some of that infrastructure and share the cost with the for-profit side. That was clearly delineated in the management services agreement, in the agreements between the right and the left-hand side in terms of cost sharing. So, for example, when we get, for example, into Dr. Mazza's compensation, the intent and the agreements for Dr. Mazza, Maria Renzella, and the others were that they were supposed to keep track of the time that they spent on Orange versus the time that they spent on Globe. And they were to charge only time that they spent on Orange to Orange under that management service agreement.
And did you assure yourself that that in fact was taking place?
During the discussions in the fall of 2011, and understand this was all set up in, so it would have been March, April 2011, thereabouts, and this is new and getting set up. Based on discussions with Maria Renzella, and it would have been late fall, or in fact I think it might have been January 2012, when we were meeting, going through some of the stuff, it became apparent that Dr. Mazza had instructed an allocation of time that was not reasonable. And we had, in fact, Barry Pickford, who's chair of the Finance Committee, and I then asked Maria to redo it and redo the allocation so that it would be proper. Because we obviously didn't agree with, Dr. Mazza's generalized allocation, if I can put it that way. But there was a very clear legal agreement that between the right side and the left side that said the left-hand side is paying for the time of certain management that was based on actual hours, actual work done for Orange.
Now,
I think
please,
just
unless
two
you
more
want to
minutes.
use, okay,
Two more minutes, and I'll wrap up here. This has been very helpful. I think we have a much better understanding of how this came together and what the outcome was and potentially could have been.
Mm-hmm.
I would like to go back, and I don't want this to be taken on a personal level. The last time you were here, I asked you about your compensation as a director. So
yes.
$200,000.
Correct.
And you chose not to comment on my question. I'm going to ask you again.
Sure.
I think all of us understand the role of not-for-profits. I think many of us are on boards. We know what the compensation levels are. We've heard from many people who have come forward and asked them their opinion of the various compensation levels. And I'd like to ask you again, Mr. Beltzner, how could you justify drawing down $200,000 as a director of a not-for-profit organization when and you're probably going to tell me you relied on an external compensation review. I do know this, that as a chairman, an experienced board member of many boards, you also know that you don't have to accept that. And what you could have done is to say, you know something, this is a not-for-profit organization, it's delivering an essential service, and that I can't even justify accepting that. You had the opportunity to do that. Your comment, sir.
I'll do my best to comment on that. Mr. Klees, and I'm not going to try and do anything to justify any dollar amounts. I can just give you some comments. My comment is I have spent probably 30 years serving on volunteer boards at no compensation. I have a long history of providing support to the community, as many of us do. I think that's normal for all of us to do. I also hold a 10-year award from the Government of Ontario for community service. Spent years on many boards on a free basis. These are boards where the level of involvement and the risk inherent in being a board director were relatively minor. When the Orange organization was formed initially as a not-for-profit, we established a very small board remuneration. I believe in 2006, 2007, it might have been $15,000, $20,000. We had one board director flying in from Dryden, spending 3 days to come in for a one-day board meeting. I think we offered him an additional $1,000 to cover, he's a retired professional, and to cover some of his costs. So they were relatively modest, I would say, at that time. Never, given the fact, though, that, and keep in mind, in those early days, we were given the opportunity to restructure an organization or to create an organization that did not exist. There was not an infrastructure. There was not a business. There were many hours of meetings. And we didn't charge on a per meeting basis. We just, said, listen, $10,000, $15,000 a year, whatever it was fine. The risks were relatively low. We then, of course, created the foundation, the charities, and none of those, of course, had remunerated boards, and nor they should. But then we created the for-profit PEAL and the for-profit AIR. And for those two subsidiary companies, notwithstanding director's liability insurance and everything else, certainly from my own personal point of view, being a director of an airline company raises your risk profile somewhat. And so the remuneration was directly related to the for-profit companies, balanced between the amount of time that things took and the risk increase that directors undertook. With respect to, so the board remuneration over the 5-year period, 6-year period, increased, modestly over time. The $200,000 remuneration that you refer to in that particular 2010 year, in addition to this, the for-profit subsidiary entities and all of the operations and so on and so forth, we had, of course, the issue of the independent committee work, and which I presume Alfred Apps has commented on. The amount of time that the independent committee has taken. I mean, that's all documented in detailed billings and so on. So if you ask me whether the $200,000 was fair or not, it was certainly fair in relation to the number of hours spent on the for-profit entities and the number of hours spent on the work of the independent committee. Which on an hourly rate basis, by the way, would have been about a third of what I normally would have charged as a professional. Thank you, sir. So.
Thank you. So we'll move on to the NDP. Who would like to go? Mr. Singh?
Yes.
Go ahead, please.
Thank you very much. Thank you very much, Mr. Beltzner, for being here. Just wanted to ask you, just changing up the questioning, I'd like to ask you to comment on, if you can, some of the issues that there's somewhat of a contradiction going on between the evidence or the testimony of Minister Matthews and Dr. Mazza.
I'll do my best.
Yes, thank you. That's all we can ask of. Thank you. Dr. Mazza testified that he had requested a number of times to have a meeting with Ms. Matthews, Minister Matthews. From his testimony, and I think it's very well corroborated that he had met with every other minister and spoken to every other minister. Are you aware of Dr. Mazza making or attempting to have a meeting with Minister Matthews? Are you able to comment with respect to that?
I am not aware of personally any specific request that Dr. Mazza had made with respect to a meeting with Minister Matthews. There's nothing in my recollection that suggests that.
Okay. So were you going to add something else?
That I'm not aware of. Whether he made requests to other ministers previous to Ms. Matthews,
Yes.
Again, I'm not sure.
Okay.
I mean, I would not have been involved.
Sure. There were changes. There was changes that occurred as Orange developed. There was changes that occurred.
In the wrong direction, too far. Speak into the mic so we can hear you.
Oh, I'm sorry. All right.
Turn off the other mic.
I apologize.
No, no
I'll
problem.
speak into the mic. Thank you.
So there were changes that occurred in terms of the corporate structure of Orange, and throughout there's been a number of deputants who've come forward and said that as these changes occurred, the ministry was advised of changes that occurred. Is this something you can speak to? Are you aware of this in general? And I can go into more detail in a moment. But is this an area that you have knowledge of?
No, I think to be fair, what the board had knowledge of is what the board was informed. And the board was informed that there were regular meetings with the ministry, as required under the performance agreement, that the ministry was fully informed of our actions at all times. And certainly, there was the opportunity back in 2008, 2009 with the MNP interaction to have had lots of discussions concerning the activities of Orange. And, I don't think there was anything at all that was hidden or otherwise from MNP at all.
And just to ground the comments you're making now,
sure.
What are they based on in terms of your knowledge of this? Is it based on direct knowledge or who told you, or what's your basis for this knowledge?
The people that would have said that to me and other members of the board would have been Dr. Mazza, Mr. Lapine, in particular those two. Okay. I don't recall whether Maria Ronzella ever said anything of the nature. I presume that she in fact did have meetings with the ministry to go over financial statements and budgets and things of that nature.
Okay. I'd like to move to a different area.
Sure.
This is regarding, when Dr. Mazza's salary was initially disclosed on the Sunshine List, and then it transitioned to no longer being disclosed on the Sunshine List.
Yes.
One of the reasons why that was possible was due to a restructuring of the way Orange was organized in terms of having different entities. Is that correct? Are you aware of that?
Yes, that's correct.
That changed to the corporate structure of Orange, which allowed for, in a completely legal sense, maybe not in the spirit of disclosure, but certainly in the legal sense, that insulated Dr. Mazza from having to disclose his salary. That changed to the corporate structure. That went through the board and was approved by the board?
Oh, absolutely.
And that change, and do you agree that change allowed for that legal exemption from having to disclose salary?
Well, it's not something that I need to agree with. I mean, legal opinion was, our concern, as I said before in testimony, our concern was, when we do any restructuring, are we on board with the performance agreement? I mean, are we in violation of the performance agreement? Are we in violation of any other law? Is there any other regulation that we need to comply to? That's the objective of the board, is to ask that question and to get positive answers from that. And we've received, all the assurances and legal opinions and whatever else was required. Just, to go back to this point on compensation disclosure, I would say the compensation disclosure issue probably was the last thing from the board's mind, in this restructuring. Bear in mind, and I just want to reiterate, right from the beginning, and I would take you back to a board retreat in February 2006, just after the formation of Orange. We have our first board retreat in the lovely hamlet of Kenora in the middle of winter. I think it was about 38 below or something that time. And at that board retreat, Dr. Mazza, who was for all intents and purposes, the person appointed by the government and selected by the government to create this organization. He had the knowledge, he had the vision. He presents to the board this vision and this business direction that he is informed or agreed with government to do. Right? And in that presentation, there is a very clear and definitive set of statements that said we are to create this air ambulance system, we are to look for funding through donations, which had not been done previously, and we are to look for opportunities for for-profit operations to support the Orange operation. So right from the beginning, and this is documented in the minutes of the board retreat, And we had a facilitator at the board retreat that documented everything. So it would be in the board minutes. Right from the beginning, in the board's mind, here was an individual, Dr. Mazza, that had been presented forward by and approved by the government, keep in mind, from where we're coming from, to now bring forward a business plan and a vision and a concept. This is what he put forward. This is what we understood to be the objective, and this is what we went forward with. And from my point of view, throughout the years, there has never been a time when we weren't, if you like, public with that objective. There are lots of things that we said, did, that clearly indicated that that's the direction we were heading in. For example, I mean, back in 2010, or might have been even 2009, there were discussions with potential investors, OMERS and others, regarding, an investment in a for-profit operation outside of Ontario, leveraging the knowledge and know-how, the good knowledge and know-how that's been built up. So this was no secret. Now, whether, in fact, Dr. Mazza or others in the organization had properly kept the government apprised through the process, I honestly don't know. What I do know is that in January 2011, I did send, with the help of Alfred Apps, legal counsel, and a whole bunch of other people, a very detailed, informative letter, which I thought was necessary to send to government, to everybody I could think of in government, to say, look, this is what we're doing. It's a novel thing. I recognize you may not have, sort of the legal right to stop or whatever. I think Alfred Apps had some words like that in the letter. But, this is what we're doing. And if you have a comment or question or concern, surely, you would have raised it.
Fair enough.
So I'm confused.
Fair enough.
Quite honestly, I'm confused. We
We
set out, I just want to say again, we set out way back in 2005, 2006 with an honest objective. And we may have debates as business people about whether this structure or that structure was the best appropriate structure, whether this decision was the right decision, or whether, tail rotors falling off AW139s is good or bad. But in all of these cases, business cases, comprehensive business cases came to the board. The board undertook all appropriate actions. We felt and believed and understood that this was the right thing to do, and that government was fully informed. And at no time, just to go back to your comment, Ms. Jellins, at no time did the government ever come back and say, this is no good. I asked myself the question right from day one. I was interested in, if I might digress, I was interested this morning. I was listening to a few comments from Hugh MacLeod, who was here this morning. And I very much respect Hugh MacLeod. I've known him for a number of years, and I understand his work and so on. I was particularly interested in his comments about the early days of 2002, 2003, 2004, that Orange was to be set up as similar to the Alberta Stars program, but Ontario-fied, if I can put it that way. And, which, made sense. Orange or air ambulance was unknown to the public. There was no public funding. Surely to God the public should know about this fantastic entity or operation and help to fund it, whether public or corporate donations, fine. And I understood from Mr. MacLeod's testimony that there were lots of presentations by Dr. Mazza about failures in the past, ways to go forward, and so on. Throughout all that discussion, there wasn't anything raised about the question of for-profit. It was sort of all, model after stars and so on. And I asked myself, so how did this come forward that the government of the day divests to basically a fully independent, not-for-profit organization, an operation combined with a performance agreement that I think it's fair to say, Jim, didn't have all the hooks that one would normally see?
Yeah, especially on the for-profit side, probably.
Right, and notwithstanding even the for-profit side, I think there might have been other hooks even on the foundation side. So, to me, as I came into the organization, here was a situation where a company had been created, or was going to be created. The government was clearly giving the organization full reign and full opportunity. Dr. Mazza is telling the board, our goal is to raise donation income, raise for-profit income, run the organization well. That's what we're doing. And there wasn't an indication of anything else. So Hugh MacLeod's testimony this morning was a bit of an eye-opener to me, I have to say, because that was, that sort of identified for the first time in my eyes that somewhere along the line it went off the rails. But I have to say, I think it went off the rails as Orange was created, or the Ontario Air Ambulance Services was created at day one.
Mr. Beltzner, thank you very much for that. I just wanted to just bring you back to another issue. Thank you for sharing those comments. No, I appreciate that. Just wanted to ask you, after the MNP audit occurred, were you aware of the recommendations that MNP had put forth?
Of course.
And when the first recommendation was to ensure that the government was comfortable with the corporate structure.
Yes.
What was the impact of that on the board, and what steps do you take when you saw that? And just one additional thing, did that inform your decision to be very extensive with your briefings in 2011 when there were further changes? Did the MNP recommendation to make the government more comfortable with the corporate structure, did that inform your decision to make sure that there was this letter sent out to all interested parties in the government and even the opposition related to the corporate structure?
Right. Thank you for that question. I'll do my best to answer it. With respect to, I think there were a set of recommendations in the MNP report that basically said the government should take the initiative to get a better understanding of the corporate structure, do some changes to the performance agreement, things of that nature. My point was, from my point of view, I didn't have any objections to any of those things, of course. But it's up to, I'm not government. We're kind of downstream from that. So my expectation was that, if government wanted to do something or accepted the recommendation, they would. But nothing happened. So that's the first answer. With respect to your second question about whether it informed the subsequent January 11 position, maybe subconsciously, but not consciously. That's the January 11th letter quite simply was a matter that any good board, undertaking something of this nature would have paused and said, hey, let's just do a sanity check with government, who are key stakeholders. And that was the purpose of that letter. We weren't going to go ahead unless that sanity check had been done. And had we, I know Dr. Mazza had, made comments about, had the minister said something and it would have been yes ma'am and so on. Notwithstanding all of that, we have a board of professional people, of experienced business people, and with some of us with long relationships with government. Had there been a pushback from government, on this, we certainly would have entered into a discussion and, kind of figured out, well, where's this going off the rails and why are you objecting? And maybe that would have raised a flag. Maybe it would have stopped the situation at that point in time. But I can tell you that from my point of view and my board's point of view, there was nothing that came back that would suggest in the least bit anything but a supportive response. That's all. That's the best I can tell you.
Oh, Chair, it's still ours?
Yes.
I'm just going to clean up a few things that
Sure.
have already been worked on. So when we had Mrs. Rhoda Beecher here and asked
Yes.
about Dr. Mazza's salary, she said kind of the same thing as you, but not exactly. So I want to see, do you see it as different, or are you both saying the same thing? She says Dr. Mazza's salary came from the board, or the compensation committee of the board, was made up of his base salary, his performance pay, his long-term rotation pay, and his clinical director pay. That's what she told us yesterday. It's not exactly the words that you use, and you added a percentage for benefits, which
Yes.
she did not share with us.
Yes.
So are you comfortable with what I just read? Let me read it again.
Let me maybe speak to that. What came to the board for approval, and what the board had specific responsibility to approve, was his base compensation, any bonus,
Which she called performance pay.
performance pay, and any special bonus. And then any, loans or things of that nature. What did not come to the board for approval was any specific payment that he received as a patch physician. We didn't know how many hours he spent in the box in the patch physician role, or what he got paid for that. That didn't come to the board. The board didn't approve that. That may be the only discrepancy in that.
Do you remember what the percentage in lieu of benefits were?
Oh, now you're testing my memory.
Yes, I'm good at that.
I think 30%.
30%?
I think 30% of base pay.
Very good. The other little item I wanted to clean up before we go on, or did you get it?
Just a moment here. The stipend that Dr. Mazza received under that separate contract to the Personal Service Corporation, as I indicated, the contract in 2008 was brought to me by Luis Navis, who was chair of the Compensation Committee, to renew the contract for that stipend. And as I indicated, I spoke to Luis about it, what is this? Got an explanation in terms of the history of it. Read through the contract, from a business person, looking and saying, well, does it have deliverables, responsibilities, those kinds of things. It was reasonably structured. There were amounts set out for each of the medical director areas, and on that basis, I signed that contract. I don't know whether we ever took that particular contract to the board. I don't believe we did. And quite frankly, I think it disappeared off the radar, if I can put it that way, until it reappeared in 2011. The contract had a clause in it which, and I'm sure you can get a copy of the contract, had a clause in it which allowed for automatic renewal year to year. I see Mr. Klees smiling, which, I suppose is both, well, it's not really unusual, it's not unusual. What's unusual in this situation is that, Dr. Mazza would renew it, if you like, without performing services. I think, as a professional, that's a little... anyway, I'll let him deal with that issue, if I might.
Okay, so that was the cleanup I wanted to do with the compensation of Dr. Mazza. The other little cleanup I want to do is on questions about payment for the board. So in February 2006, things are just starting up. Right there in 2006, the board approved a $10,000 to $15,000 a year payments for every board member.
I honestly can't remember the specifics for each board member at the time, but I can tell you that in late 2011, under my instruction, that information was put together in detail by board member, by company, for every year, and reported to the ministry.
So there's a document that exists out there.
There is a document which exists, which I saw. I don't have it anymore, but I saw it was, and the instruction was to communicate it to the ministry, and I think it probably went to Patricia Lee, if I'm to guess. It would have come from Maria Renzella, and it would identify very specifically by year, by company, by board member, exactly how much everyone was paid through the period.
Before you put that together, did you know where the money was coming from?
Of course.
Okay, so if we talk about yours,
Yes.
can you tell me of the year 2010 is the one that has been on the top of the Toronto Star for 6 months, so everybody
Yes.
knows that
Thank you,
the
Toronto
amount
Star.
is $200,000. Whether you want to or not, you have
I'm
no
worth more
choice.
than that, by the way. But
Yeah.
let me put that on
So,
record.
of the $200,000 that came to you for the year 2010,
Yes.
any idea where the bits and pieces came from?
Well, I can't remember the exact breakdown,
That's okay.
but it would have come as a board retainer for the board of Orange Air and Orange Peel,
Okay.
as well as an additional retainer as chair of an operations committee of Orange Peel, and then an amount per meeting, sort of a meeting fee for every committee meeting or board meeting.
And would that include the committee meeting and board meeting of Orange, the not-for-profit entity?
Orange was a charity, and there was no board remuneration for Orange,
Okay. So,
or Orange Foundation, or J Smarts.
okay.
So the only board remuneration was the remuneration out of Orange Air and Orange Peel, which of course, obviously charged that back as part of the management fee into Orange.
Yeah. And in a day-to-day basis, I take it that the boards of those different entities, Orange Air, Orange Peel, met on the same night?
Not always. We tried to consolidate meetings as best as possible. As you can well appreciate, we had Lauren Crawford before he passed away, he flew in from Dryden. A number of us had other business interests that, took us out of the province or out of the country. So we tried as best as possible to combine board meetings as well as committee meetings around the same days so that we could be as efficient as possible.
Yeah, it makes sense. So, but you knew that the administrative fees that Orange Air was accruing were going to be charged back to the not-for-profit.
It would be charged back to Orange and paid for by the performance agreement, yes.
Okay, so we
Yes.
all know? All
Yeah.
right. It's good, Mr. Speaker.
You have 3.5 minutes left of your total time, if you want.
Of my total time, I'll save my 3.5 minutes.
Okay, very well.
Preciously.
And we'll move on to
You can have some of my 10.
Move on with
Mr.
government.
Zimmer.
Mr. Zimmer.
Thank you, Chair. You are a very distinguished accountant, 38 years experience, KPMG. I've got your resume here. You describe yourself expert, 38 years experience, public-private sector. You've made reference to having worked with, I think, 100 CEOs earlier in your
I would
evidence.
imagine at least 100.
You know the corporate world.
Yes.
You know how corporate boards work.
Yes.
And you know that the way corporations work is that boards are there to do a couple of functions. One, set the strategic policy of the corporation. Then second, make sure that the management, the CEO, executes on those strategic goals and policies and so on. And thirdly, on a more general level, to exercise the board's oversight function on everything that the CEO does and everything that management does and everything that the corporation does. That's the traditional corporate governance model. Do you agree?
Yes.
Given that's the traditional corporate governance model, and given your outstanding background and experience in board governance matters, I must say I was astonished to hear your statement, and I quote earlier this afternoon, "The board is at the mercy of the management team." Because the whole idea of boards, corporate boards, be it private sector, public sector, but particularly public sector and publicly held companies, is that the board exercise its oversight function, set the strategic goals, set the policy, hold the CEO accountable, and deal with governance matters. So it strikes me as bizarre, particularly when you say in your other evidence justifying the $200,000 board salary that Orange was a particularly risky operation and a complex operation, and it warranted a whole lot more work, hence the $200,000 salary.
In that year.
How it was that the board did not rein management in.
Well, Mr. Zimmer, I will do my best to respond to the question. First of all, you outlined 3 responsibilities of the board, which I agree with. And I think in my testimony, I indicated that the board did, in fact, take its responsibility to set a strategic direction for the organization, establish the business plans, ensure that the CEO was aligned to the business plans, ensure that the CEO reported back to the board with respect to those business plans through the board structure of committees, and we had all of the appropriate committees. The board had input both in writing and oral, informal reports and oral, from all senior members of the management team on the critical issues of the day. The board exercised, in my experience, very good in-depth oversight.
Yeah, and
what we, if you would allow me to finish, sir, what we were not aware of was that there were items not being presented to the board, and it's a bit of an issue of, well, how do you in a board identify issues that are not being presented to the board, that you have no knowledge exist? And I take, for example, let me take a couple of issues at hand. I was particularly disturbed to hear a number of the paramedics and others speak about.
I appreciate that, but what's your response? How does your
Let him
statement...
finish, please. Go ahead.
May I finish?
Yes, please.
Thank you, Mr. Chair. I was particularly, disturbed by the comments of paramedics that testified here about, and others, another information that, apparently was presented to management and not acted on. And those items, I can tell you, and you can, we have very comprehensive board committee minutes. I can tell you there was nothing over the years to indicate a difficulty in that area to the extent that these people testified. Now, you'd say, well, what else could the board have done? Well, let me offer this with respect to that case. I personally did a number of write-outs over the years, including Thunder Bay, which is one of the areas where there seemed to be some difficulty. I spent a day with paramedics, with pilots. I did this a number of times. Quite a number of my board members did the same in different bases. Did we hear anything from them? We're friendly people. We're down-to-earth people. We open up conversations. We have nothing coming back from them that suggests any significant difficulty. We have additional opportunity to interact with frontline staff in the annual
I appreciate all of that, but I want to get on with the rest of my questions. I'm not going to let you chew up the clock, so I can't follow up on the rest of these questions.
Just try and answer your question.
I understand your point in what you did. But the statement that the board is at the mercy of the management team, I put it to you that your peers out there in the corporate governance world, other chairs of other boards, would be appalled at that statement. Now, let me ask another question here. We have heard the story of Chris Mazza's girlfriend, Kelly Long, how she made her way from a fitness instructor to a job at Pathways, which was offset by a payment from Orange to Pathways to cover her salary of $60,000. And after 6 months or close to a year there, she moved over to Orange at $120,000. We've heard, so that's the girlfriend of the CEO. We've heard the story of the daughter of the chair of the board, who got a contract to work with Ms. Long on a services agreement with Augusta, and there was a payment, I think $4.8 or $4.6 million to cover the work that Ms. Long did and your daughter did. And then yesterday we heard from the Vice President of Human Resources, Ms. Beecher, that her daughter joined the Orange board and got a job running the operation in London, Ontario. And I put it to her, and I ask you, and you're the board chair, and you must have known about Long, Kelly Long, and I presume you knew about the daughter of the Vice President.
Just to interject, if I might, Chair, I did not, and I did not.
All right. Did you think it was a conflict of interest for the chair to allow his daughter to work on a project of that sensitivity and magnitude that generated some $4.6 million in income?
As I testified previously, I don't know what my daughter was working on at the time. I did not discuss business with my daughter. I understand that my daughter was actually a fairly junior individual, and was told, as I understand subsequently, was told to go and work for Ms. Long. I don't understand this reference to my daughter and the work in Augusta. I don't understand the relationship there at all.
Well, it was a $4.6 million payment. That $4.6 million payment must have, people must have been aware of that at the board, the CEO?
Of course.
And did anybody say, who's doing the work on that?
There was no question. The board was not involved in determining who was doing work on contracts.
Did you let the board know your daughter was working on the project?
No, I don't believe I did, and I don't believe I knew my daughter was working on the project.
Let me, here is a copy of an email that you sent on December 24th, Saturday, December 24th, to Ken Flynn, who's over here at the Finance Department. I think I gave, everybody's got a copy? I want to read this into the record. From you, Beltzner, to Flynn, Saturday, December 24, FYI re-Orange. The total compensation to Dr. Mazza reported by Orange to the Ministry contains a sum of $400,000 for medical services related to a services agreement of a number of years back. This item came as a bit of a surprise. On review of the original agreement of many years ago, which was with Dr. Mazza's professional firm, there are specific services detailed and I believe required at the time. The automatic renewal of the agreement year after year appears to have been done without any further review or approval. Furthermore, after my questions to Rhonda Beecher concerning this amount and payments related to it, it further appears that payments were made to his company without any supporting invoice or support for the work contemplated under the agreement. Further, on discussing the matter of medical director roles with Tom Lepine, he reports that several people had approached Dr. Mazza concerning his continuing to draw this amount where he apparently was not even providing services. Dr. Mazza apparently continued to insist that he be paid and was quite, quote, forceful about that. Further, they now tell me that he has been trying to reframe, redraft, renew the agreements to some ex officio role in order to continue to receive these payments. On another matter brought to my attention yesterday, it appears that the company, through Dr. Mazza's authorization and insistence, was paying a Dr. Tom Stewart at Mount Sinai Hospital for services that do not appear to have been needed or delivered. This relationship's been going on for some time, apparently, and there is need to examine the underlying motive and authorization for these payments and the acceptance of these monies by Dr. Stewart, as well his apparent demand for this money as reported to me by Tom Lepine yesterday. Finally, Dr. Mazza's compensation apparently included a vacation payout demanded by him, not authorized by the board, and in the absence of an internal policy to support this. Maria Renzella confessed this to me some time ago, and I demanded that the practice stop and the necessary actions taken. Ken, there is beginning a trail of transactions which are most disturbing. The company has made payments without notice to detailed services provided under agreements. Payments have been made on the demand of Dr. Mazza that are outside of established company policy. Dr. Mazza engaged in services not needed and not delivered. Underneath all of this is the other question of why Rhonda Beecher, Maria, and possibly others went along with this and without reporting it. Clearly, this may be the tip of the iceberg, so to speak. I've advised Barry Pickford, Chair of the Audit and Finance Committee, of these matters as well. This is most disturbing. Rayner. And going up the email, the response from Mr. Flynn. Rayner, clearly these matters warrant further scrutiny. Rest assured we shall take these into account as the audit moves forward.